let's take a look at the local market on the day. Nicholas Sorour, Portfolio Manager at Sasfin Securities, joining me. Nicholas, thanks so much for your time. So let's talk about the retailers now, because the retail index, general retail index, up 2%, over 65,000 points today. What's taking place in the retail space? Because everyone was quite bearish at the start of the year. Who's buying? Who's selling? What are you seeing?
It's been an amazing volatile index. I mean, we were down from 72,000 points, I think was the high. We ended up going down to 62,000 points. Now we're back up to 65,000 points. And
540 to be exact.
It's all in a matter of this year, basically. Yeah. So down 15%, up 5%. It sounds like a resource index rather than the retail index. Mm-hmm. What's happening at the moment, I think, the retail sector was the darling of the last couple of years. You could argue it got a little bit overheated. We had a lot of numbers coming out from the last quarter over Christmas and early January. Those numbers weren't as good as expected. Same store sales growth, which is a very important number, indicated that these stores weren't growing at the pace that was expected. Therefore, a bit of cream had to come off the top, and we saw quite a big sell-off there. Which was interesting. A lot of the sell-off was attributed to foreign shareholders. Foreign shareholders we know hold large amounts of our retail stocks, and the finger was pointed at them as being the culprits in the sell-off. But on further inspection, if we have a look at the numbers going through in January, interesting enough, foreigners weren't massive sellers at all. In fact, they were net buyers on most of the stocks. In fact, the only
the foreigners are still buying our retailers?
Foreigners are still buying. The only stock that came up as net selling was Woolworths, basically. Everything else, the Foschini Group, Mr. Price and so on, they were all net buyers. So it's actually more locals that were in the process of selling. And I think it was based on that news that the quarterly numbers going through over December weren't as good as expected. What we saw is maybe a bit of an overreaction to the downside. 15% drop in an index over a couple of weeks is extraordinary, and we've seen a little bit of bargain hunting coming in now. For example, ShopRite at 170 Rand was arguably good value. We've seen quite a nice rebound back to 180. A lot of the strength, interestingly enough, was initially in the food retailers, and we're starting to see it come through specifically today in the apparel retailers, where we had Foschini up and Mr. Price up quite strongly. And then your bargain hunters come into the foray here, and they tend to pick up stock and send things up a little bit higher.
Do you have a preference there, though, between the food retailers and the clothing retailers?
I do, yeah.
Because just looking at some of the numbers, ShopRite is down almost 15% this year. Woolies is down over 7% this year, and Mr. Price is down 10%. So ShopRite is the worst off this year, but I suppose one of the highest price to books, price to PE ratios.
Logically, I like where ShopRite is going into Africa. I think they were one of the first retailers to actually see that expansion, and I like the idea of food being an essential, commodity at the end of the day. So it's your semi-durables that I would be more concerned about. I mean, there's no doubt that the area is getting a little bit stretched, but I think on food there's still that you need to have it atmosphere about
defensive
it.
nature.
Correct. There we go. That's the word I'm looking for.
Yeah.
So, and also the African exposure, I think is very good from their perspective. So my preferred pick out of all of them would be ShopRite. I think if you want to go for a dual role, a company that has both, AVI was very interesting. And also, interestingly enough, it was the most defensive one that pulled back the least out of all the retailers. And then I think if you're looking for pure apparel retailing, I think the Foschini Group might offer some bargain hunting at these kind of levels, also dropping quite significantly.
Let's switch focus to construction
Another
players,
index,
the cement sector. Just firstly, PPC. Firstly, they're celebrating their centenary celebrations in Harare today, and they've recently got that indigenization license, and of course they can continue to operate in Zimbabwe, and basically saying they want to expand their presence in Zimbabwe. That's really a nod of confidence in that economy.
Correct. Look, I mean, there's a lot of growth potential still in Southern Africa. It's not just South Africa anymore. PPC has been in Zimbabwe for years. There's always this issue about the Zimbabwean government and the whole Indigenization Act. That's kind of seemed to be less now that they've got the actual certificate that they need. And with that, they can expand and not just supply Zimbabwe, but also supply Mozambique, Zambia and other neighboring countries. So having a look at the entire industry, it's definitely been on the back foot for quite a number of years now, since the liquidity crisis, the credit crunch, all of that. And we're starting to see some revival coming through. If you look at the cement numbers coming out of South Africa, there's definitely, we reached this trough and we're starting to see a bit of an increase there. There is more competition, I guess, in South Africa with Sepaku coming online soon, but maybe PPC's nature would be more up into Africa, where they've got more of a competitive
Well,
advantage
they have that
there.
target. I mean, 3 years' time, they want to have at least 40% of their revenues coming from outside South Africa, and at this point in time, it's 21%. So basically doubling that in 3 years' time.
So it's an interesting space to keep track of, definitely. So it was quite nice to hear that.
But construction firms are under the spotlight right now.
Again, yes.
Competition Commission is still investigating them. The Hawks are now investigating them. Roger Jardine saying they've set aside money to potentially pay a fine, saying no point playing a cat and mouse game with the authorities. They want to basically wipe the slate clean and move forward. What does this mean?
I think from an investor perspective, it is a little bit worrying because the potential fines are massive. You must understand construction companies work on very, very small margins. And if you have a look at the potential fines being a part of their total profit, you could wipe off 3 years of profit there, which is devastating. I think the two companies that are most under the spotlight with regards to these investigations is Stefanuti and Wilson Bailey Homes, and we've seen.
And everyone loves Wilson Bailey Homes, or most of the local.
I think the reason being is Wilson Bailey has done the best out of all of them. So it's where your money has been safe for the last five years. So it's got this aura about it that they can do no wrong.
And also exposure offshore.
Correct, a little bit of exposure offshore as well. The other benefit is that they have very few contracts with government specifically. They're more of your pure construction business. So there's been that element to it, which I think has protected most of the downside. Going forward now, you've still got this dark cloud that's now arrived over everyone's heads, and everyone's re-looking at their construction thesis about this massive recovery going forward. It is difficult. Marion Roberts has taken a bit of a hit. Stefanuti Stocks has taken a bit of a hit. Group 5 still looks okay. That moved above 30 Rand, dropped a little bit back to 28 Rand. So there's this tentative recovery, but now you've got the stumbling block that's been released, in the form of the media and all the negativity around it. So I think it's still a very difficult area, Sam,
to be involved in. Do you hold construction stock?
We don't yet. I think our view, if we're wanting to be in that space, we would rather go the PPC route. I mean, it's always been our strategy to follow if we have clients that specifically want to be in the construction space. Wilson Bailey Homes would be the only pure construction company that we would want to have on our portfolios. We've been very concerned still about getting into the Marion Roberts, the Group 5s. We still think it's a little bit early at the moment. So we're still steering clear generally of that sector.
Yeah, now one of the laggards today on the market is ABSA. The stock's just over 170 Rand, almost 171 Rand, down 1%. And there are questions now around this deal with Barclays, the $2.1 billion all-share offer to buy Barclays Africa. And I know that Kenya's Barclays branch, or Kenya's Barclays, was transferred today. Do you have any strong thoughts on this? Because a lot of shareholders have been saying, I don't know if you are a shareholder there, they should be using their excess cash to pay for this, and it's said to have around 10 billion Rand in excess capital.
Sam, we're not big shareholders in any of the major banks. We still think it's still a very difficult environment that they operate in at the moment. I mean, obviously ABSA had a massive recovery in share price on this news. Beforehand, there was the whole talk about top management leaving and issues within management there that scared off a lot of investors. We still don't believe it's an absolutely compelling reason to be invested within the business. We still firmly believe the spaces we want to be in the financial area would be your unsecured lending. We still believe in the Capitex and the African banks of this world, and that's where our space is. So we haven't been concentrating too heavily on what's been happening in ABSA at the moment.